All right. Good day, friends. I'm super excited to be with us again in this class. We will continue with our introduction level to accounting. Introduction level to accounting. That's what we are continuing with. And today we are looking at double entry principles and the effect, the corresponding effect of each transaction. Now, every transaction has effect on your account. We're going to be examining it. We have used this question before, but I felt like it's ideal we use it again so that it would help to buttress what we have done in the previous class. I hope it's understood. All right, so we'll go straight to the business of the day. All right, let's read together. Emmanuel set up a trading business, buying and selling goods. Full stop. Record the following transactions which occur during this first month of trading, July 2019, in the relevant ledger account. Now, but in this case, this is what we're going to do. We're going to be recording the transaction, looking at the double entry principle, and we'll be looking at the effect. That's what we're looking at because we have solved this problem earlier on. So in this class, we're looking at the double entry transaction and the effect, the corresponding effect. All right. So the first one is Emmanuel introduced 500,000 into the business by paying money into a business bank account. Now we'll name this transaction 1. Let's name it transaction 1. All right. And what are the actions that we have to take? Emmanuel introduced 500,000. From our experience from our previous class, you know that Emmanuel should be taken as a capital, isn't it? So in this case, you do what? You credit capital, debit what? You debit bank. All right. Now, what are the corresponding effect of this transaction? Increase in capital, and increase in asset, because the fund in the bank is an asset. So that is the way it will be treated. All right. The next thing is number 2, transaction 2. The business bought a motor van for 60,000 naira. Payment was by check. Motor van, right? So it is your, what are you debiting? You credit by check. You credit bank and you debit motor van. This is the action you are taking, and what are the corresponding effect of it? Your bank decrease in asset, while your motor van asset also increase in asset. All right, so these are the 2 actions you're taking. Transaction 3. The business bought some inventory for 30,000 naira, paying by check. Inventory for 30,000 naira, paying by check. You debit what? Purchases. Credit by check, right? Credit bank. Now, what are the corresponding effect of this? This will be increase. This will be increase in. All right. So this is excuse me, increase. Oh, sorry. increase in asset, which is your inventory. Your inventory increased, and you have decrease in asset, which is your cash at bank. Right. The next line says what? Line 4, transaction 4. The entire inventory purchased in 3 was sold for 50,000 naira. Was sold for 50,000 naira. Okay, that means sales. Is that not so? This is sales, and there is a decrease. What will you do? You credit sales and debit cash. And if that's the case, you now come here and say, what is the effect? The effect of this one is there is a decrease in assets and increase in assets also, which is cash. Okay, transaction next. Okay, this decrease in assets is decrease in, there's a reduction in your inventory. If you make sales, your inventory is supposed to reduce, so it decreased. Okay, transaction 5. More inventory was purchased for 100,000 on credit. Okay, if it is on credit, what will you do? You will debit what? You will debit purchases, debit purchases, and credit what? Your trade. Okay, all right, so you credit what? Trade payable. Is that correct? Yes, payables. And trade payable is increase in liabilities. While this one, that's increase also in your assets. Increase in your assets, which is your inventory. God bless you. All right. Transaction 6. 50% of the inventory purchased in transaction was sold for 80,000. What happened? Money came in, right? So if 50% was sold for 80,000, money came in, but some inventory has gone out. Money came in, it will increase this thing. Some inventory has gone out, so you debit cash and credit sales, right? All right, so what is the impact of crediting sales? Inventory has gone out, decrease in the inventory, then we have increase in cash. No, sorry, not decrease. You say decrease in assets, because inventory is your asset. Then increase in assets, which is your cash. Correct. Decrease in assets will now be decrease in, let's say, inventory. 7. Number 7 is question 7 is looking at a payment of 30,000 was made to a supplier. Money went out. Is that correct? So if money is going out, so you know our suppliers are our trade payables. So you debit trade payables, debit trade payables. So have this will not be what? Trade payables, decrease in liabilities. Decrease in liabilities. Number 8, a payment of 40,000 was received. So money came in. Is that also cash came in? So you debit cash and do what? Credit customer and on credit. Okay, trade receivables. So what is the impact of crediting trade receivables? Decrease in asset, which is your trade receivables. Okay, then there is increase in asset, which is cash. Right, that solves that. That's number 8. Let's go to number 9. We have this. Okay, I think there is ammunition here. All right, number 9 saying Emmanuel drew 10,000 naira. Number 9, Emmanuel drew 10,000 naira. Transaction 9, 10,000 naira. That's drawings. So you credit cash and you debit drawings. So this transaction shows that there is a decrease in assets, and decrease in capital. Right. The next transaction is 10. Transaction 10. It says Emmanuel paid 2,000 for diesel for the motor van. Okay, payment is you credit. Is it through check? Okay, through check, credit bank, and debit expenses. And this one, debiting expenses or crediting banks, means decrease in assets. Our cash reduced, so our assets reduced. All right, and this is right, shows an increase in expenses. Line 11, transaction 11. The business paid 15,000 by check for the premium of an insurance. All right, that's insurance expense. All right, so we will debit insurance, debit expenses, right, and we credit cash. So what is the accounting equation here? Decrease in assets, because our asset, which is cash, has reduced. The increase in expenses, all right, so that is the transaction here. Then the last one on this question says the business received a bank loan of 100,000 naira, repayable in 2 years. The business received a bank loan. You will do what? Debit bank loan. You will debit bank, and you will credit either non-current liabilities, or let's put non-current liabilities, non-current, or you put liabilities, credit liabilities. Ordinarily we put it as bank loan, so there is increase in liabilities here, increase in liabilities, while this one is increase in assets, So friends, this is otherwise called accounting equation, double entry principles, or we call it accounting equations. Accounting equation. Let me put it here, accounting equation. And what does it mean? Let me quickly explain it to us at this point. Accounting equation. Accounting equation means that if you had your assets plus or we say assets is equal to liabilities plus equity. All right, so we have this: assets is equal to liabilities plus equity. The meaning is the total on the total on the asset side must be equal to the addition of both the liabilities of the entity, and the equity. All right, so that is that, friends. That is that. There are different ways to say it. For example, if I want to turn it around, I can say that you make liabilities a subject of formula. Make liabilities let's use the subject of formula. Right, to give you something like this: liabilities is now equal to asset minus Equity. Equity. You understand it now? All right, let's make equity equity the subject of formula. To not give you something like this: equity is equal to assets minus liabilities. I hope you understand it. Okay, so these are just the accounting equation formulas. All right, and I hope with this you, you have really gotten something tangible, and you have understood how to treat this debit capital, all this increase in capital, increase in assets, decrease in liabilities, etc. Please, if you have any concern, if you have any question, do not hesitate to call my attention to it. Please chat us up in the table below. You understand it? In the table below, just chat us up and we will respond to you immediately. We appreciate you. Please like and share and subscribe to our channel so that we can reach more coverage on social media. We appreciate you, and I'm sure I will see you in my next class. Catch ya, see ya there.